All right, welcome to my Safe Wheel live stream where I share my real P&L on 3 accounts and teach my proprietary Safe Wheel options trade system for free. The system is currently up 24% year to date. Also, please type in the chat that you can hear me okay. I'm going to assume that you can. Also, post any questions you might have if you want to learn about the system or anything about trading related that you think I can help you with. Be sure to post those questions uh, early on before the broadcast ends. Sounds good. Thank you, Jessica and Walter. Okay, so we're good. Now let's go to the next things. The earnings edge. What happened with the earnings edge last week? There really were no good um, stocks coming into earnings. There's not a lot of earnings going on. There was one stock that I looked at, filtered it, didn't fit through all the filters, so there were no trade. So the week before I did Costco. That was a nice winner there. But you can see that the account is at started with $5,000 and the net liquidation is $7,434. So what is that? $2,400 or something like that over the year, around 48% so far year to date. And with the system, the way that I works based on my back tests and everything that I've seen is that I win about half the trades, lose about half the trades, but my losers are around 200, my winners are around $500. And since I've been using this latest tweak, my record is looks like it's 4 wins and 1 loss. So I'm actually ahead of the curve there, about the 50-50 win rate. And the earnings edge is available. There's a link in the description. All right, the next is the Premier Level 5. Let's get into this here. Okay, so I trade the ES with this. Started this account with $30,000. It's currently $32,378. I started this account on April 8th, and the largest drawdown on this was approximately 4%, and it's currently up about 7.9%. And that's not year to date. That's only since April 8th. So the annualized rate is higher than that. If you were to compare it to the S&P 500, which is what I like to compare myself to, the S&P has been down 22% since April 8th and is currently down 12% since April 8th, since I started deploying the system. Okay, and also there's a link in the description for the Premier Level 5, and this is what I would call the top system that I have. One advantage to this system is it only trades one underlying. I did have a question about correlation and stock correlations, and do I calculate the correlation between different stocks that I trade? I don't trade different stocks. I trade SPX and ES, which is really kind of the same thing, but I only trade one underlying, unless I do the safe wheel, of course, that's different. But that's the advantage to the Premier Level 5, is that you only have to deal with one underlying, and you can be diversified, or I can be diversified, with just by using one underlying, using options in the way that the Premier Level 5 system works. Okay. On the Premier Level 5, my record is 10 wins, 2 losses, and 3 break-evens, and I currently have 4 open trades. Okay. All right. Let's get into the safe wheel. This is why you're here, I think. I'm trading Uber, and basically what happened last week was I had my put hedge on, and I sold a put, and the stock went down, and I got assigned. So I got assigned at the $28 price. You can see that here. So I purchased 100 shares at $28. So this is kind of the traditional part of the traditional wheel. So now I'm going to look to sell a covered call. So let's take a look at that. We can look at that first, but also we have to talk about our put hedge too. But I'll get into the. Let's take a look at the potential So I'm going to go into the nearest expiration, the one that expires on Friday, and I'm going to look at the calls right here. And I want to sell something out of the money because, if I get, if the stock goes back up and they call away my stock, I'll make money. Like say I would make 50 cents here if I sold at 28.50, but there's not enough premium there. So I will sell at the money, the 28. I'll sell this premium here. I won't sell the 27.50. That's in the money. I won't do it. But I'll sell at the money. So what I'm going to do is sell this call. So I'm going to do a covered call here. If we look at, I own 100 shares of Uber at $28. So I'll sell the 28 strike, but I won't sell anything lower than that. So I'm going to go ahead and do that. I'll do that now. Now I'm going to do one. Maybe I can get 33. So I want to get at least 28 cents for this because I'm at the 28 strike. That's my cost basis. And I'm going to do one. Okay, so that didn't fill, so I'll go down. Okay, filled there, you can see it. And now you can hear it. Okay, now what I need to do is protect this put hedge. Actually, this put hedge, I'm going to do something different with it. But I need to protect my put hedge, so I'm going to buy a call that's less than $6. Probably won't be able to get this for 6. I can try. I'm going to buy one $30 call for 6. I won't pay 7. Okay, good. I got it filled. All right, so everything looks good here, except for now I got to kind of evaluate my put hedge. I've already kind of decided I'm going to stay with Uber, obviously. This put hedge looks good, except for the days till expiration is only 95. So I'm under 100 days. So what's happening is my theta, the depreciation of this is too fast. I don't like how fast it depreciates because this is the stuff that I sell up here. I want this to depreciate faster than my put hedge. So this put hedge right here needs to be moved. I'm going to roll it. I'm going to move it out. Now currently we're at 26.63. So, but really my cost basis is $28. So I'm going to take $28 and look at about what 80% of that is. 28 times 80%. So 22.50. So I'm going to remain here at this 22.50 put. And that was just a little bit of a nuance right there about this is kind of a rare situation where I'm actually rolling this and the price of Uber is kind of lower, where I could technically go lower with my put hedge, but then I got assigned at $28. So I'm going to use the $28 as my as what I'm going to tell me where I should put my put hedge. So let's see what I can do with this thing. I go here, create rolling order. So I need to go out to, let's do it this way. Let's delete this. Let's go. Where am I going to go with this thing? Is the question. So the 95, I want to do it at 150 days, the closest to 150 days, kind of without going over, but I don't have a choice. Like I have to go to the 158. There's nothing in between here. So let me see. So I'm going to go to the 2250. So this is the one I'm going to go for here, this 2250 put. And it's going to be the May 19th, 23. So I'm looking at that again. I'm going to go into here, create rolling order. So I'm going to go to there it is, the May 28th, 23, right? That's the one I want to get into. So it actually kind of set it up perfectly for me. Set me up to roll out and at the same strike. The 19th of May. It's going to cost me a debit. You can see here, I want to pay as little as possible. The mid price is 66. Okay. I'll start at $60 to roll this thing. And I'll work the order. Move this out of here. Get mid price at 67. $66. Sometimes you don't get mid price. Okay, looks like I got filled there at 68. So let's look at our position now. I've got the May, this one has 158 days left, my put hedge, to protect my wheel strategy. This is basically a long strategy, right? But then I have my hedge here, and I'm protecting this hedge with this long call right here. Because if the market, if the Uber shoots up a lot, this hedge is going to lose a lot of money. So I want to have some type of protection. Okay, I hope that all made sense. And let me see here. Also, there is the safe wheel guidelines and flowchart, and also the 6 filters that I use for choosing the right stock. So if you don't want to go through all of this data and all the live streams to learn how to use it, you can kind of take that shortcut. And I put a link in the description for this safe wheel strategy, which is currently up 24% year to date, with pretty low drawdowns. I'd have to say my drawdowns are probably 5% at the most. I'd have to rerun those numbers, but that's about what they are, just calculating off the top of my head. All right, let's get into some questions. And don't forget to hit the subscribe button and notification bell. All right. Uma, the PL5, how to learn from the system because real money is needed. Also, we can use ES Mini on the PL5. Yeah, you can use those. You can use less money to trade the PL5 with these kind of things. The thing is, your commissions are going to overwhelm any kind of profits. So it's not like a statistical probability that you're going to make money if you're under that $30,000 mark. But you can still learn the system that way if you choose to do that. I don't have anyone doing that currently, so I haven't gone into the details of using the different, people with less money. I don't recommend it, but it is possible. Does the PL5, how many tranches are traded? I'm not sure how to answer that question. We do 4 tranches total. That's how many we have on right now. So we're fully allocated, if that answers your question. I hope it does. Where to start the basis for the safe wheel. I would get, me personally, I don't like to spend a lot of time kind of going through a bunch of videos. So I would get the flow chart, and I would get the how to pick the best stocks using the 6 filters. But then also you do need to go through the first few live streams, because you can actually see me trade it and talk about why I'm doing what I'm doing. But you won't have to go through all the live streams if you get that flow chart and the filters, 6 filters. Link in the description for modestly priced flowchart and support materials. Otherwise, watch free archive YouTube videos. Flowchart also covers situations that have not come up with the live stream. Thanks, Walter. That's something that I try to say every week. Nino says thanks. And Jerry, doesn't the long 100 shares protect your put hedges? Yes, it does. But not to the extent that I want it to, because I want to make money too. Like, yeah, it'll protect that hedge, but will I make a profit? I want to make sure I pull out a profit also. Walter, still trading M successfully. What is M trading at? 2181. I see here. Okay, that's that's great. M's a good one. Was a really good one for us, or for me, I should say. George, what is the edge? Well, the edge comes in selling option premium, because when you buy options, what when you're selling options, what the edge is that there's that possibility of that big leverage bet making money, and so people pay more for options than really what they end up being worth about 83% of the time, not all the time. So around 80, 85% of the time, options are overpriced because people want that big leverage bet and they're willing to pay up for it. Okay, so selling options has an edge to it. And it's the difference between implied volatility and real volatility. Now, if you can capture that edge, that's the goal. Sometimes people are trying to capture that edge, but they're not hedging, and they capture the edge. They capture it, capture until one day something happens, like a market crash, and all of a sudden, they're down 50%. So yeah, there's a lot of people making money. For example, maybe even with the traditional wheel strategy, maybe even this year, some people are making some pretty good money with it. It's totally possible. But there's going to come a day when you're going to get hit if you're not hedged. But there's the edge. I hope that I explained that. If you have any other questions, ask me, and I'll try to explain in further detail. But the goal is to sell option premium and get away with it, right? There's a lot of people selling option premium and they're kind of getting away with it. They get away with it. They get away with it until all of a sudden the market crashes or something happens to that stock and it goes down significantly, and they're not getting away with that anymore. But you want to be able to sell the edge and get away with it at the same time. Okay. Walter, like, subscribe, notify. Thank you. Yeah, hit that notification bell. I have a lot of people that ask me, hey, where is this live stream? I didn't get to see it. If you hit that notification bell, it'll show up on your notifications and you can get access to it even after the live stream's over. George, sell volatility. Basically, that is where the edge is, because the options are overpriced and people are hoping that they're going to become more volatile than they actually do become about 80 to 85% of the time. So because people think that there's going to be more volatility, the price of the option goes up and you sell it. If you can sell it, there's an edge. Okay, are there any other questions today? I'll just give a little bit of time here. All right, so I'm going to go ahead and end the broadcast here. I always have one thing I like to say. Oh, here's another one. How do you know if an option is overpriced? I don't think there's any way that you kind of like know that an option's overpriced. I mean, the price is the price based on, supply and demand and the market. But when you look at a graph and you see the implied volatility and you compare it to the real volatility, you can see there's a difference. And you can see that the implied volatility is higher, about 80 to 85% of the time. And so that's when the option was overpriced in the past. Can you predict that in the future? No, I mean, we're just playing the probabilities that they're overpriced, which they are, like I said, around 80% of the time. You can't just look at it right now today and say, oh, that's overpriced for sure. You don't know. You're just playing the probabilities. Okay. I'm going to go ahead and end the broadcast, but I do like to say one thing before I always end. If the P&L is not real, what else are they trying to conceal? I'll see you guys next week.